before the King's Justice in the Superior Court of Justice. Attend now and you shall be heard. Long live the King. The Honorable Justice Hennessy presiding. You may be seated.
Good morning, all.
Morning, Your Honor.
I'm just wondering if that was by design, that we had the lights off.
22.8 degrees over.
I get the design. Okay, well, as long as I can see, I don't mind about you guys. Had you tested it with that level of lighting?
Tested what?
Well, I think we were just trying to go with what we had sort of in the week prior to the break where, you know, the witness had the lamp on, that lamp was lit enough for you, and the lights down, but if the court would prefer the lights on like this, it's fine.
No. That's what I'm saying. If you tested it, because I do have a light, are you okay with those lights low?
Yes.
Did you want to try it?
Yes.
You are? Let's try it.
Just the thanks.
Okay, let's try it.
Good morning, Your
mood.
Honor. I
Good
just have a
morning.
housekeeping matter to deal with.
All right.
So you may recall at the opening of yesterday's session, my friend asked me to enter the previous versions of the work papers when I entered the exhibit. So I confirmed the dates yesterday, so I can do that now.
And in what form will you enter them?
So there'll be electronic versions.
Okay.
So I just want to point out that the original set of work papers were titled Michael Smart and Robin Bodaway work papers, and they were corresponding to the June 30th, 2022 reports. And that is already in the record under the JBD as Exhibit 1-6394. And then the second set, which I will call electronic copy of the work papers of Michael Smart and Robin Bodaway, corresponding to the December 5th, 2022 serve replies. I'd like to enter that as the next exhibit, which I think is 65. And we're going to send an electronic copy of that to the Madam Registrar now.
To the court.
Yes.
Thank you. So just to recap, those go in case lines first. That's where we're keeping it. Okay.
And the next set, work papers of Michael Smart and Robin Bodaway, dated May 10th, 2023. Those were sent to Madam Registrar yesterday,
Yes.
and I'd like to enter that into the record. I believe that's Exhibit 66. And then the current version, electronic copies of work papers of Michael Smart and Robin Bodaway, dated May 14th, 2023. That was sent to Madam Registrar yesterday, and that should be Exhibit 67.
So is that 4?
Yes, one was already entered into record, and there's 3 new ones.
But are they 3 new? Sorry, I missed the first one. Are they 3 new exhibit items or numbers?
That's correct. 65, 66, and 67 is the
Right.
current version.
Thank you.
Thank you, Your Honor.
Good morning, sir.
Good morning. So I'd ask that Professor Smart return to the stand. And if we could go to slide 42. Professor Smart, can you please tell us about slide 42? So carrying on from yesterday, we'll now be talking about the procedures we use to determine whether expenses in the PAO should be included in our own accounts. Doing so, I would ask if someone could go with full screen. I'll be able to read it a little better. Perhaps all of us will as well, if it's possible.
Is this what you mean by full screen, Professor?
No, it's not. It's often Control L. It depends on one's operating system. I can't be sure, but I would suggest hitting Control L and see what we get. Yeah, that's better. Thank you very much. I'm glad I'm an expert on something.
Well,
like to
usually
add-
we rely on Mr. Schachter for that.
We'd like to add Adobe to Professor Smart's list of qualifications.
Thank you for waiting. So principles for inclusion. Here we're guided by the Court of Appeal order, the decision, which said in the relevant passage, relevant expenses to be considered are Crown expenses related to collecting, regulating, or supporting relevant revenues. And how do we go about doing this? We went through the PAO. We looked at resource departments or related expenses of other entities of the government, such as Treasury in some cases, and so on. We included expenses that serve, recalling the discussion yesterday of our conceptual approach, we include the expenses if they serve to increase resource rents in the province, or if they serve to increase the government's ability to collect revenues from those rents. Okay, so the first would be supporting revenues, and the second would be collecting revenues, I suppose. Now, here are some examples of things that we include and that Mr. Hutchings generally does not include. So this is kind of the business end of the differences. Firefighting, we include reforestation expenses, mining regulation, silvicultural research. So these are just examples, but they're important examples of things that we think are should be included that Mr. Hutchings generally doesn't.
So this second bullet point is a distinction between you and Mr. Hutchings.
Yes, and I'll talk
Okay.
about each of these in more detail, and I'll back up the statement that we think it should be included. And he
No,
doesn't.
but my question is just,
Sorry.
it's not just what you have included, but what you have included that Mr. Hutchings has not.
Yes, and
Got it.
and only examples of that, Your Honor.
Okay,
There are others, of course.
thank you.
Now, I'll just remind everyone that by my reading, Mr. Hutchings' approach, his conceptual approach is to exclude expense unless that expense can reasonably be expected to be fully recaptured in revenue. And so that's why, as we'll discuss, that's why he has excluded these under his principles, but they are included under our principles that they support rents. Now, we don't include everything of these resource departments. We exclude expenses that do. Now, we don't, I apologize. We don't include everything. We exclude expenses that, in our view, do not support rents and do not support collection of revenues from rents. The key examples are northern development programs, which were most typically administered through the same department that administered the mining programs. So we go through the PAO as carefully as possible, and we exclude everything that looks like it supported those general northern development objectives of the government rather than specific mining development objectives. The other key examples of systematic exclusions in our accounts are parks, typically administered by the forests department, but excludable under our approach. And as we discussed yesterday, fish and game, which we've excluded on slightly different principles that I mentioned yesterday.
And can I ask then, on your third bullet point, Northern Develop is also excluded. Those two examples you give, or three examples, are also excluded by Mr. Hutchings?
Yes.
And on your fourth bullet, how do you characterize those?
Could I ask you, I'm often confused on this point, which is the fourth bullet? There are some.
Sorry, relevant expenses can occur before or after revenues.
Right. Well, here the issue is, and I will return to this in a later slide. Often when Mr. Hutchings justifies his decision to exclude an expense, he neglects the fact that we have to take a 170-year-long perspective on this matter, and expenses might be referable to revenues that might support revenues that are generated in a different year, either before or after that expense was incurred by the Crown. A key example is mine rehabilitation programs. Evidently, a mine is developed and then the ore is extracted. That generates MPT. At the end of the useful life of the mine, there may be mine rehabilitation expenses, and they may be borne by the Crown. In some cases, they were borne by the Crown. We think the fact that there are no revenues left to collect from that mine it's not germane to the question of whether those expenses should be included. We think those expenses are referable to, were generated by the activities that generated MPT revenues in earlier years. So reforestation is the second example given here of that. It's an expense that's directly related to the revenue generating activity. It just didn't happen at the same time as the revenue.
Thank you.
Slide 43.
Oh, sorry, I've got a couple of
forgive
questions
me.
I'd like to ask you first. So returning to the second main bullet, you distinguish between expenses that serve to increase rents and expenses that improve the government's ability to collect rents. Could you please give one example of what each of those would be?
Well, many of the examples under that second bullet on the slide, we think support rents. So firefighting preserves the value of standing timber, which in turn generates rents in the future, and the government will capture a portion of those rents through stumpage charges. That would be an example, in our view, of supporting revenues, supporting rents, and therefore supporting revenues, to be precise. The collection expenses, there's less disagreement, I think, between us and Mr. Hutchings on that. He typically includes the same ones that we would classify as collection expenses. And there an example would be timber management programs. One of the functions of the Department of Lands and Forests, the Ministry of Natural Resources, was wood ranging and scaling, which means the process of estimating the market value of standing timber on Crown land, which in turn helps to determine what stumpage charges should be levied and what stumpage revenues should be collected in the future. That's an expense directly related to collection of revenues. We include it, of course, and Mr. Hutchings, as far as I understand, tends to include those expenses as well.
One further question. Why are you counting expenses that support rents when the Court of Appeal said to count expenses that support revenues?
Well, rents support revenues, and therefore expenses that support rents support revenues. That's a short answer, somewhat facile, perhaps oversimple an answer, but recall our discussion yesterday. We think that the approach that must be taken here is to think of the resource sector of the province as a whole at first, without distinguishing between the Crown's role and that of the private parties. So we determine the total amount of resource. We think about the total value of resource production and the rents that are generated from that. Then certain policy decisions of the Crown will determine what portion of those rents accrue to the Crown through taxes and levies. And similarly, policy decisions of the Crown determine what portion of the expense supporting those rents are borne by the Crown and what portion borne by the private resource companies. Those are policy choices. They're part of our calculation because ultimately we calculate Crown revenues minus Crown expenses, but they're not economically an important distinction when it comes to determining what resource rents are. Resource rents could be generated through private sector activities or public sector activities. That's the first step in our conceptual approach. The second step is determining what then out of that accrues to the Crown. Does that answer your question?
So when rents increase, is it fair to say that Crown revenues also increase?
Yeah, and that's back to what I think is perhaps an oversimple explanation, but even so, perhaps a better one.
Well, but that question is to be distinguished from your answer, isn't it? I thought you said that Mr. Lipton's question was, so when rents increase, Crown revenues increase? Was that your question? And just before that, you had said, but it's a policy decision of the Crown whether those rents accrue to the Crown. So is it in every case increased rents increase Crown revenue, or in some cases depending on a policy decision?
No, you're right, Your Honor. I cannot state that in every case, an activity that supported rents then led to increased revenues. To take a simple example, the mining profit tax has typically had an exemption level below of mining company income, below which the MPT was not levied. And so any activity that led to increases in private resource companies' incomes below that threshold would not trigger additional MPT liability. That being said, we can only deal in this matter in our accounts over 170 years with averages and aggregates to some extent, while being as sensitive as possible to the details. And so I think of this in terms of the average effective tax rate that
I wasn't asking what happens. I was just pointing out to me the difference between those two answers. Like on the one hand, I thought you said it's a policy decision. On the other hand, I thought you said it was an absolute. Is one of those more correct than another? Or?
I would not say it's an absolute, Your Honor. There are certainly cases in which certain activities could increase revenues without triggering any additional liability, but that would certainly not be the norm. Typically, there would be some revenue generated through some of, any one or many of the various charges and taxes and levies the Crown imposed. And so the effective tax rate would, in almost all cases, be higher than zero, but less than 100% without question, right? So I'm not in any way asserting that Mr. Hutchings' own standard could be met, that the expense would generate, as much revenue or more as was laid out by the Crown. In response to your question, I will say we can imagine certain cases in which one specific expenditure might have only supported activities which would generate zero revenue, but that's very difficult to imagine. Even in my example of the MPT and its threshold, so that some companies did not pay MPT, they did pay other charges such as mining fees and acreage charges, as well. Almost any program that I can measure in the accounts would be very likely, if it generated any gains for these small cap miners that didn't pay MPT, it would probably generate some additional revenues for the larger companies that did pay MPT. It's not an absolute. If you're looking for an absolute, certainly I agree, I cannot provide it. But I think the reasonable assumption is that some amount of revenue could be referable to, would be associated with any program that we can see in the public accounts and consider whether it should be included or not.
I'm just going to signal to you both that when I hear about attracting liability and effective tax rates, that's outside my association with what I'm trying to understand. So you can do your best with that, but I haven't been really learning this as a tax policy issue.
Yes,
So
I
I'll
believe.
just signal that to you.
Sure. Yeah, that's very helpful. Thank you, Your Honor. So to take a more general example, let's say there was a Crown expense such as fighting forest fires, and that fighting of the forest fires meant that there was more standing timber. Would that increase both the rents and the Crown revenues?
In general, it would increase if it saved trees, which were merchantable timber, which had the potential to come to market in future. Then at some point in the future, there is a reasonable possibility, which would have been anticipated by the Crown, that those lands would be licensed for timber harvesting and therefore would attract stumpage. So firefighting and reforestation seem to be key examples of the principles we're talking about here. If those activities support rents, those rents in turn will generate additional revenues at some time in the future, or could only be reasonably expected to. Not every tree will be cut down in this province, certainly, but in choosing which fires to fight or not fight, the Crown doesn't know that.
Professor Smart, please tell us about slide 43.
We've talked about included and excluded. There is a third category in our accounts here, which is overhead expenses, partially included and partially excluded. The idea is that overhead expenses are those, they're not associated with any particular program, whether an included resource program or an excluded parks program, for example. Instead, they're administrative functions of the ministries which support both kinds of activities. So I think the best example is typically there was the Department of Lands and Forests had an administration branch or a main office. There was, of course, always a minister's office, and those functions of the department should be associated with both the included and excluded, if I can use the term, the relevant expenses and the non-relevant expenses. So what do we do in those cases of those programs? We allocate them proportionate to, well, it's a proportional allocation. Let me go through the words on this slide a little more carefully. So we proceed as follows. We first categorize expenses into these three buckets of included, excluded, or overhead. We then calculate the percentage for that year of included expenses in the total of included and excluded. And then we include that percent of the overhead expense as part of our included expense account. So for example, if 33% of the non-overhead expenses for that resource activity of that department are included for a particular year, then we include 33% of the administration branch of other overhead expenses.
Oh, sorry,
Please.
go ahead.
Could I go back? I'm sorry for this, but can I go back to your reforestation and firefighting examples? And your example that the reason the expense is included is because when you have a fire breakout, you don't know which fire might reasonably be anticipated to affect future timbering activities. So you fight fires. I don't know that much about a lot of things, but I am reading the paper these days about Alberta. And they're fighting fires for many very specific reasons that don't have to do with timbering. And can we not presume that that has always been the case with firefighting? That there are goals, there are multiple goals, not all of which are related to revenue producing activities.
I think that is possible, Your Honor. I think it's reasonable to presume that the Crown does have other objectives in mind in fighting certain fires. Probably the Crown expends what it does because it has other objectives in mind, such as saving infrastructure, protecting, as in Northern Alberta, other resource industries and their assets, and protecting people and towns. I'm going to suggest to you in a few slides that those expenses are not central in the Crown's thinking, or in particular, not central in the Crown's thinking when these policies were developed in the early 20th century. As well, I'm going to suggest to you that these other objectives don't matter. And again, we talked about that yesterday in discussing our conceptual approach. The Crown might perceive other benefits of these programs, but for us, the relevant question is the but-for question. But for those other motives, but for those towns that existed perhaps adjacent to certain forested areas. But for those towns and those other objectives, what change would we expect to see in the Crown's firefighting policy? What lands would they allow to continue to burn if they didn't have those other objectives? So that's the thought process that we apply when we think about these questions of inclusion. There may be other objectives, but the question is, to what extent do those specific objectives trigger additional expenses? If we believe they do, then we do try to apportion. In the case of firefighting, we don't think that those other factors trigger substantial additional expenses, nor that the Crown would be able to make distinctions of that kind to say, we're fighting this fire for this specific objective and that fire for a different one. And therefore, we don't do any apportionment in fire. We think they should be included in their entirety.
That might surprise the people of Northern Alberta, I think that, but not that they would be wrong or right to be surprised, but still might. You're saying those other objectives likely don't matter.
We're saying in the absence of those objectives, it would be necessary to conclude that the Crown would have behaved differently. They would have let it burn.
Okay.
So Professor Smart, on that point, are you saying then that if those communities and if that infrastructure did not exist, the Crown would still fight the forest fire?
I'm saying that I believe that it would, and that it, in my opinion, it's not reasonable to think that the Crown could have made such distinctions and changed its firefighting expense decisions to reflect one objective versus the other.
If we could have slide 43 again on the screen, please. Sorry, technical difficulties. If we could go to slide 43, please.
Got it, thank you.
So Professor Smart, you gave your description of how you calculated overhead expenses. Did Mr. Hutchings calculate overhead expenses in the same way?
Yes, generally he did, I think. The general approach was similar.
Could you please tell us about slide 44?
This is a more expansive answer to the question you just asked, Mr. Lipton. Mr. Hutchings does take the same approach conceptually and apportions using the same principles, but he designates expenses as overhead in ways that we think are too expansive. In other words, he labels as overhead things that to us seem evidently to be resource expenses. And the result of that is therefore to attribute a large portion of these resource expenses to the excluded categories such as parks, fish and game, and so on. Now, to make that point, I've listed on this slide some examples of things, reviewing Mr. Hutchings' work papers. All of these items are items recorded in the public accounts of Ontario for particular years that he labeled as overhead, and therefore he only included a percentage less than 100% of them in his own expense accounts. Now, I don't know in these cases of overhead, he didn't report in his work papers what percent he was including. Very complicated process. He can't report everything, but therefore I cannot tell you precisely what portion of these amounts are excluded, but I know that it's typically more than 50%. So a majority, I believe it to be the case that a majority of all these items was excluded by Mr. Hutchings. And I would suggest that simply reviewing the names and not at least understanding what I believe I understand about the activities of the departments, all of these things should have been included in their entirety.
And sorry, what you say is it's not 100% clear exactly how he did it, but you say of this list, Mr. Hutchings captured more than 50%, captured to be excluded.
Correct. He excluded more than 50%, I believe, of all these items. I went a little further in the case of the forestry programs. He has several kinds of overhead designations in his own accounts. One of them is called forestry overhead. And so it gets complicated, but I think what that means is that he has excluded many forestry expenses that we include, such as firefighting that we discussed. And so there's an apportionment even within categories that he agrees are forestry. He would treat some of that as overhead for included and excluded forestry functions. In that case, I dug a little deeper, and I believe that for forestry overhead for the most relevant years, he includes about 30% of them and excludes 70. So,
And is that a department, forestry, or?
it was the most important branch of the Department of Lands and Forests up until the early 1940s.
Thank you.
Is a branch a sub part of a department?
Yes. You, Mr. Lipton, as an employee of the government of Ontario, might know more than me, but I think it's the next level down. It would be run by a director or even assistant deputy minister.
Well, I'm sorry.
I said assistant deputy minister.
I'm not here to testify, so maybe next time. So what is the effect of Mr. Hutchings in properly counting resource expenses as overhead? How does that affect his overall numbers?
Well, it makes his expense smaller and it makes his NCRs larger.
I'm just going to ask you questions about a couple of these, just so that we can expand on why you believe these expenses were wrongly treated as overhead by Mr. Hutchings. Could you tell us a little bit about the iron mining fund?
The iron mining fund was a subsidy program, which was supposed to encourage the development of iron mining in Ontario and the development of steel refining in Ontario. So it was a subsidy to the industry, no question about that. But it supported rents, it supported iron mining development. And therefore, we believe it supported revenues from iron mining. And in my mind, it's includable. More broadly, I would think it's either included or excluded, but there's no way one would treat that as an overhead program. It's not an administrative function. It's a subsidy program.
How did you come to learn about the details of the iron mining fund?
I do not recall any specific source that I read on that program. Probably a useful source that would back up the statements I just made, the report of the Ontario Commission on Taxation of 1967, which discusses iron bounties and the iron mining fund in, as I recall, some detail.
So when you're thinking about learning about the details of these line items in the public accounts, did you often read sort of other historical documents to understand what they were?
Yes, both primary sources, meaning contemporary government documents, and secondary sources written by historians and economists.
Could you please tell us what refunds crown lands are?
Yeah, so this is treated as overhead by Mr. Hutchings. Refunds means it's an accounting entry, and it's meant to adjust the public accounts. It's kind of an offsetting entry that we commonly see in the public accounts to this day, but very commonly in the past. In these particular cases, what the PAO is telling us is that we booked some Crown lands revenues, either this year or in a prior year, and we now realize we don't have those revenues. And so refund doesn't necessarily mean the way we commonly use this word, that somebody got some money back. It may simply be an accounting adjustment to offset revenues wrongly booked. In some cases, it does mean a refund. There were cases in which purchasers of Crown land did receive refunds, either under particular free grants programs of various kinds, such as for veterans, typically able to claim certain amounts of land for free after World War I. There are other cases in which there were such programs in place that were accounted for in the PAO in the way I just described. We patented some land. We allowed someone to patent land. We booked the revenues for that, but we didn't actually collect the revenues. So we have booked a refund in our expense accounts to offset it. Well, it seems clear, therefore, to me that if the revenues are included, and both Mr. Hutchings and we included Crown Lands revenues in their entirety, then you must include the refunds in their entirety. Certainly, it's not an overhead program. You can't pick a value in the middle.
Could you please tell us about salaries and contingencies forestry branch?
Well, I've already alluded to that. The forestry branch was the main branch of the Department of Lands and Forests. And prior to that, the Department of Crown Lands, which was responsible for forestry management in Ontario. Forestry management means all manner of issues related to forestry. So it's forest protection activities, fighting disease, fighting fires, timber management activities, such as estimating revenue potential, setting policy for revenues, and reforestation. These are all examples of forest management activities, and the forestry branch of the ministries in the first half of the 20th century was responsible for all of that. They were under the direction of the director of forestry, who was later designated as the chief forester. You can see this is a scientific official running this branch whose job was forest management. So once again, for us, these are included expenses. They should be included. Mr. Hutchings has only included a fraction of them.
Because he treats them as overhead.
As overhead, right. And as we discussed before, he regards most of the things I just described as not includable activities of the department. And so when he sees that item in the PAO, salaries and contingencies means incidental expenses of the forestry branch, he designates all of it as something to be allocated across included and excluded. And for him, that means mainly excluded.
All right, let's do one more. How about supplementary revenue?
In this case, I don't know precisely why that entry occurs in the accounts of the Department of Mines, but I do know that the Supplementary Revenue Act of 1907 was the legislation that empowered the Crown to levy the MPT. So my inference is supplementary revenue, when that's included as an expense item of the department that collects the MPT, that means the expenses they incurred in order to collect the MPT, among other taxes on mine. That's my inference. I believe it should be included. I have no sense of why Mr. Hutchings thought it was an overhead activity. It seems clearly connected to collecting revenue. Seems to be right in the name.
Did the court want to ask about any of the other items?
No, thank you.
Professor Smart, can you tell us about slide 45?
And I would like to use one of my so-called tree maps, my colorful charts, to give everyone a sense of the relative size of the different categories of expense that are included or excluded in our accounts. So here again, I've added up I've taken all of the specific expense items in the PAO. I've assigned them to one particular category, calculated the present value, including interest, so that we can compare across years. And each of these boxes is proportional to the relative size of those categories. And it is, again, forgive me, a little hard to read, but you can see, for example, that roughly 2/3 of our expenses are forestry related expenses. Within that big green box, there are various categories that I'll talk about more as we go forward this morning, but it's mainly forest management, forest protection, and firefighting. There is an excluded category within forestry, the green excluded box. That's mainly parks and fish and game and certain flood protection expenses, which in our opinion are more about protecting residents than protecting marketable groundlands. So we excluded them. Similarly, the purple area are the mining related programs, and we've allocated them to the various descriptive categories that you see. The much smaller orangey area would be mines. Oh, excuse me, land programs. So I would suggest that there's nothing definitive here. We're simply trying to offer you a description of what we see in the accounts and give economic interpretation to what is in our included accounts. Each one of the names here is chosen by me, not by the PAO, but I read through each line item and I assigned it to one of these categories based on my understanding of what the departments were doing.
And where would you, if at all, agree with in your labeling that you've included some overhead, or that overhead is within one of these boxes? Would it be in basic organization or admin or any of those?
Here, admin corresponds quite closely to overhead in our accounts. It may be exactly the same thing,
Okay.
not entirely. I would have to review line by line to see whether the things we coded as overhead all ended up in the admin boxes here, but it's
But
basically
mostly.
the same.
Okay,
Now, basic organization, Your Honor, we do not regard as an overhead program.
okay.
And I've added a couple of slides to discuss later this morning because I noticed that Mr. Hutchings talked about the basic organization function and related it to overhead. I think it's important to clarify what that function was.
Professor Smart, does this figure show province-wide expenses?
Yes, well, there are no dollar values here at all. So these are our province-wide accounts that we use to construct this figure. Then for each, and it's the sum of all years from 1898 up to 2019. For each individual year within that, we then take some percentage of it, which is our apportionment, our geographic apportionment that we discussed yesterday. And then, so these accounts then become our RST included expense accounts after that share is applied to it. Now, that share differs from year to year. I'm talking about mathematics, so maybe Mr. Lipton should tell me to shut up soon. That being said, what I'm trying to say is that if we did this for our RST included accounts, it would look quite similar, but the sizes of the boxes would change a little bit because the RST share changes from year to year.
But this is province-wide, but you presume that it would also track with the RST.
Yes, in each year, we take some percentage of the province-wide accounts for separately forestry, mining, land activities. And we assume that that portion of the province-wide expense supported rents and revenues within the RST. Mr. Hutchings does exactly the same.
On a geographic basis?
Yes, using our geographic proxies as discussed yesterday.
Okay.
And the rough idea, if I may, Your Honor, if it looks like 20% of the forestry activity was within RST for that year,
Mhm.
the province's total, then we think 20% of the revenues roughly accrued from RST, and that 20% of the expenses that supported revenues were incurred in RST. That's the idea.
So, sorry, so in my mind, it's not by geographic size, but by presence of forestry activity.
Exactly. We do our best to measure forestry activity when we have the data to do so.
And you and Mr. Hutchings do the same thing in that manner, right? You allocate in the same way.
Same procedures and very similar results as we saw yesterday on that particular point of apportionment across the province. Yeah.
So in the green portion of this figure, although it is very small, in the upper right portion of the green figure, I see an entry that says Mississauga salvage. What is that?
The Mississauga Forest Reserve burned during World War II or immediately after World War II. It was a major event and it led to two things. The Crown expended large resources in cleaning it up. And then in the process of salvaging the partially burned timber, some Crown dues, some Crown stumpage revenues occurred as a result. We believe that all of the Mississauga and those items therefore are particularly noted in the public accounts. Instead of simply saying this was our Crown stumpage revenue, it says this was our Crown stumpage revenue from Mississauga in those years. We believe all of Mississauga Forest Reserve, and therefore all of these revenues and expenses, were outside of RST. And therefore it should be excluded in this table. Your Honor will realize this table was developed when RHT revenues and expenses were also relevant. And so that's why it appears here, but it does not appear in our RST accounts.
So did you allocate any of the Mississauga salvage expenses to the RST?
Not to the RST.
When I look at this figure, I don't see any hydro expenses. Where are they?
We did not find any hydro expenses in the PAO. Mr. Hutchings includes, both he and we include hydroelectric revenues, water power rental revenues. He then deducts 2% of it, representing his notion of what expenses to support water power rental revenues would be. That's what he says. He thinks 2% is an appropriate deduction for expenses. But we didn't see any expenses in the PAO. Our principle is the PAO is authoritative. We don't make things, we don't rely on our own intuition to develop our expense accounts. We rely on the PAO.
One of the boxes I see here is labeled Forest MGMT. What is that?
Forest management. Forest management is really a catch-all category. We'll talk about it more later. I think I defined it just a few minutes ago. But briefly again, it encompasses all manner of things that scientifically and administratively help support forestry revenues.
I see a box here labeled Fire MGMT. What is that?
Fire management would include fire detection and firefighting and fire prevention activities of certain kinds as well. So again, a catch-all category, all related to dealing with the problem of forest fires. Now, the PAO doesn't always tell us that the spending is for those kind of fire management activities. Sometimes fire would be included within basic organization or general forest management programs. So I would guess that the size of that box is an underestimate of the importance of fire management expenses overall. The air service as well, by the way, is a separate box here, but the air services function, as I'll show you in a few minutes, was firefighting.
I also see a box that's labeled Forest Protect N. What is that?
Forest protection. Forest protection means dealing with forest diseases, forest pests such as insects, and forest fires.
Can you please tell us about slide 46?
This is a lot of numbers, and
I hope your answer is going to be longer than that.
here are some numbers. So to give an overall sense of what we're doing again here, I have simply added up the expenses in the PAO, the expenses of the resource departments, decade by decade from 1898 forward. These are in nominal terms. Of course, when we have to add up across decades, we need to add interest in order to make the amounts comparable. But within one decade, it seems appropriate to think in nominal terms. That being said, once you add interest, the early years become much more important than you see in this table. And so what I hope readers will learn from this table is that we do have mining, forestry, and land expenses, all of which were important. The most important is forestry expenses. Indeed, there are no land expenses after 1994. That's a decision we made to stop including them because we didn't think that future land sales revenue was important enough to include land management programs, land administrative programs any longer. Forestry is the most important, and it grows in importance over time. That said, so does our excluded expense. That is, the portion of these resource departments expenses which we exclude also grows over time. The final column here shows you the share of the total spending of the resource departments in each decade that we include in our accounts. It starts off very high, 94% in that first decade plus of our accounts. We think almost everything that the Department of Crown Lands and the Department of Lands, Forests, and Mines reported in those years is a relevant expense, almost everything. But that share declines over time, and it drops very sharply in the 1970s, roughly coincident with a few events of importance: the establishment of the Ministry of Natural Resources in 1970 to 1972, and the expansion of the Government of Ontario's programs to support general economic development in Northern Ontario, which were managed by the various resource departments, I believe because they were regarded as having capacity and expertise in operating in Northern Ontario. When those expenses go up in the various ministries in the 1970s, our included share drops very sharply. Overall, we include, by the end, roughly 48% of the total spending gets included in our accounts.
I'm just going to try and digest that for a moment. So if I'm looking at the far right column, share included. And that share included, what you're saying is that 94% of PAO expenses associated with those three departments have been included in your expenses.
For
So
those years.
94% means
Yes, for those
Okay.
years, yes,
for that decade.
yes.
Got it. Thank you.
And looking at the bottom row, the overall share of included expenses, what is it?
It's 49%, as you see there. That is, the total expenses are of these departments are $43 billion. And of that, we exclude 22 billion and change, or just over 50%. That being said, I prefer not to talk about the total in this table because it's a nominal dollar figure. It adds dollars of different years, which have very different values.
Your question, Mr. Lipton, was with respect to the bottom line, the 43 billion.
The bottom row, I was referring to the bottom row, the rightmost column.
And these are in, all of these numbers are in nominal dollars.
Yes.
Are these province-wide numbers?
Yes.
right, please tell us about slide 47.
I've already noted that there are differences in the included expenses in our accounts and Mr. Hutchings' accounts. And I will spend some time talking about those differences and why we think Mr. Hutchings' approach is not valid. Before going into that, I want to give a sense of the overall importance of these issues because they are complex. They refer to things that happened 100 years ago, and it takes some time. And so first, I just want to check and give a sense of the importance of these for the overall calculations being done here. And in doing so, in this table, I will only be talking about the data up to 1945. That's because Mr. Hutchings changes his approach dramatically in the year 1945. He includes no expenses recorded in the PAO after 1945.
He does something different.
He does something different. But the PAO expenses after 1945, which we rely on, are just not relevant to this question of, is Mr. Hutchings' approach to inclusion or exclusion correct? And so here we'll just talk about up to 1945. I have calculated that overall, we have in present value terms in our accounts up to 1945, from 1898 to 1945, $8.159 billion in province-wide expense that Mr. Hutchings doesn't in his accounts. And I would like to know where that discrepancy of 8 billion comes from. So I went through his reports, determined whether expense items were generally included or excluded by him, and determined the amounts in our accounts associated with those items. And that's what this table shows us. It shows us the most important categories of expense in that period that we included and that generally speaking, Mr. Hutchings has excluded according to his report. And according, where possible, I validated that in his work papers. He did exclude these things in general.
Sorry, I just want to go back. The first line is total of our expense. Oh, so when you say 8.1, I'll call it 8.16 or 8.2 billion is the difference between the plaintiff's approach and your approach.
In respect of province-wide expenses in these years,
Okay,
we're starting off with an $8.2 billion gap. That's exactly right.
thank you.
And of that $8.2 billion gap, the 6 categories of expense here explain the lion's share of it. Roughly 80% of it can be explained just by Mr. Hutchings' decisions on these 6 items. And that's what the table tells you. The most important one is, of course, fire management. Mr. Hutchings excludes it, we include it. At our interest rates, that expense item in the PAO up to 1945 is 3.8 billion out of the 8.2 billion. And so on to the other items listed here: air service, reforestation, forest reserves, forestry branch treated as overhead by Mr. Hutchings, and the research category. Altogether add up to 6.7 billion out of the 8.2 billion. And so in my opinion, if we want to understand the differences in the approaches, reach conclusions about consequential choices that were made by the various experts, we should focus on these items.
And in fact, if we only focused on fire management, we'd be a long way there.
Yes. And so I propose that we should do that if Your Honor is interested.
That's Mr. Tipton's call.
I think we'll be getting to fire management, but please keep talking about the slide. I'll ask questions when you're done.
Well, there is another column to the right of the one that I've just been speaking to, and that performs the same calculations, the value of excluded expenses in the aggregate, and then for particular items, but it adds them up with Mr. Hutchings' interest rates instead of ours. So if one were thinking about his accounts and what changes one would make to his accounts, one might prefer to do it with his interest rates. In total, the 8.2 billion difference that I talked about before becomes 94.1 billion if you use Mr. Hutchings' interest rates. And out of that, the percentages are roughly the same. Roughly 80% of that 94 billion, according to Mr. Hutchings, is in these 6 items, and almost half is in the fire management. 43 billion at Mr. Hutchings' rates for fire management up to 1945 in the PAO.
So that half is, it's pretty close to just under 50%, no matter whose rate.
Yes.
Thank you.
So one of the columns on this table says R rates, the middle column. What does R rates mean?
That means the interest rates that Professor Bodway and I use to create present values, in contrast to the much higher interest rates that Mr. Hutchings uses.
And the column to the right says Hutchings rates. Are those the numbers brought to present value using Mr. Hutchings' preferred 60-40 approach?
The 60-40, 60% meaning the presumed higher returns on stock market investments, the 40% being bond rates, whereas our approach is bond rates. Now, Mr. Hutchings' bond rates are slightly different than ours in a way that's consequential, and I will discuss that later.
The first substantive row of this table says the total of our expenses excluded by Hutchings 1898 to 1945 and gives 2 different amounts. Now, the right amount is $94.1 billion. Is that right?
That's right.
I think my friend means the amount on the right.
I do mean that. $91.4 billion is greater than the NCRRs Mr. Hutchings has calculated in his papers. Is that right?
Forgive me, before answering that question, I might have misheard, but I heard you say 91.4, whereas it's in fact
Sorry.
94.1. Could you repeat the question?
Sure. How do you compare the $94.1 billion to the total NCRRs Mr. Hutchings calculated in his report?
So you're asking me about how the relative magnitude of these numbers compared to Mr. Hutchings' NCRs. And answering that is complicated because these are province-wide accounts.
Oh, I see.
And Mr. Hutchings' NCRs are his estimates of the shares that are in the RST area. And because that share varies from year to year and from resource type to resource type, there's no simple answer to your question.
Fair enough. So these are not RST figures. These are these province-wide figures.
Yes.
Does Mr. Hutchings exclude all of the amounts in these categories?
Not all of the amounts in these categories. For example, air service, which I will talk about, he includes 8% of it in his accounts. But in that case, I have adjusted for that and reporting the numbers for that. I've compared our included percent of 80% minus his 8% included to arrive at the figures that I've reported. In the other cases, I've tried to do the same, although it's not always possible to be precise. Having said that, I will correct myself. For forestry branch, he does include a percentage. I don't know quite what it is, but I believe it to be about 30% in his accounts. I haven't attempted to adjust the amounts reported in that row for his percentage since I'm not sure what they are.
Could I ask, did Mr. Hutchings perform the same comparison?
Not to my knowledge or
Okay.
recollection, Your Honor.
Okay, thank you. I was just asking you to help my recollection.
Your Honor, I believe you may be referring to a slide in Mr. Hutchings' demonstrative, slide 186,
Okay,
where he provides some explanation for how to think about the difference between his accounts and Professors Smart and Bodway accounts.
Thank you.
Um, It's a table of a very different nature, but that might be what you were thinking of.
Okay.
One of the items I see towards the bottom of this table is research, investigations, and mine rehabilitation. How does research support net Crown resource revenues?
The Crown engaged in research on all manner of issues related to resources. In this category, we'll have silvicultural research, for example. The Crown learned about how to plant trees and have them grow quickly and effectively in order to generate future stumpage revenue. Research into forest diseases will be here as well. For mining as well, they conducted extensive research to learn about the geological potential of territories across the province and within the RST territory, and other kinds of research as well in the mining department. The last kind of investigations here, which I think are quite important quantitatively and conceptually, are investigations into sound administrative and policy practices, which in turn generated more revenues. So they conducted investigations into the industries in order to determine how the Crown could generate revenues from those activities. That was expressly the motivation for some of the so-called investigations that I've included in that category.
One last question about slide 47. So this slide discusses the differences between you and Mr. Hutchings for 1898 to 1945. So would it be correct to say that this slide does not discuss any of the differences between you and Mr. Hutchings for the period after 1945?
The choices that Mr. Hutchings makes up to 1945 have consequences for his accounts after 1945. So if we were to conclude that he was not justified in excluding any of these expenses, it would have broader implications because he uses his included expenses as a statistical device to calculate his preferred included expenses after 1945. That sentence was a little unclear. Perhaps I'll repeat it if I may. He computes what he thinks is the included share up to 1945. As we'll discuss later, for RST, he believes that was 31.9% of the revenues on average for these years. And then he, without foundation, in my opinion, asserts that included expenses after 1945 should also be 31.9% of revenues after 1945. So if we were to conclude that he was wrong to exclude certain of these expenses before 1945, it would affect his accounts before 1945, and then it would affect his accounts after 1945 as well. Does that answer your question?
Yes. So if for whatever reason it were concluded that Mr. Hutchings had incorrectly excluded certain expenses, using his own theory, the percentage of expenses that should be counted after 1945, is it correct to say they would rise?
Yes. One way to think about that is that there's a kind of an uplift factor on the numbers reported in this table. We would raise them up to represent the impact of these choices on his post-1945 accounts. And those uplift factors would be very large because, of course, all the numbers grow after 1945, revenues and expenses.
What you're saying is if we use Mr. Hutchings' post-1945 approach, even if for whatever reason you ultimately thought that might be a useful thing to do, you would still want the percentage of expenses. You would say the percentage of expenses should reflect what you calculated the expenses to be. So there's,
Well,
or a better way to put it, notwithstanding his approach, that notwithstanding the fault you find with that approach, in any event, he's using the wrong percentage as per
Exactly.
your understanding of what is an expense. Is that,
yes.
do I have that?
I believe you do, Your Honor.
Okay,
If I could offer one example, it might clarify it further. Fire management again. If we were to conclude fire management should be included, then the included share, even in his own accounts, would rise. I don't know how much, but it would be maybe 40% of revenue instead of 32% of revenue. That's a guess for purposes of illustration. And then when he got to his post-1945 accounts, he would be compelled to include 40% of revenues after 1945 as well.
right, okay. So another way to answer Mr. Lipton's question is when you're relating the exercises or the computation up to 1945, the impact on that on the post 1945 is that the decisions made with respect to the inclusion or exclusion of expenses has a fundamental, foundational impact on the post 1945 exercise.
It does under Mr. Hutchings' approach post 1945.
Okay. Thank you. Sorry.
I see that we're at 11:15. Would now be a good time for a break?
It works for me if it's good for your system.
Madam Court Reporter.
Let me just catch up for one moment.
Sure.
It's 15.
All right. This court recess for 15 minutes. This court will now resume. You may be seated.
Could we turn to slide 48? Professor, could you please tell us about slide 48?
So we've been talking about exclusions and from a top-down approach, focusing on the most important differences of opinion between ourselves and Mr. Hutchings. Here, this is bottom up. Here are some examples of line items in the PAO for various years, which are excluded by Mr. Hutchings. So we saw a list like this before of overhead items where a portion was excluded. These ones are excluded in their entirety by Mr. Hutchings. And in our opinion, they should all be included. Now, I don't propose to talk about each individual one here.
Could I just ask you about one
Yeah,
or
that'd
two?
be great.
Sure. How about what are diamond drills?
In the early 20th century, the Department of Mines offered drilling services to mining companies and individual prospectors. So they purchased diamond drills that could be used in hard rock mining, and they sold those services to the private sector. The intention obviously was to lower the costs of mining exploration and increase resource production. Those items in the public accounts represent the cost of acquiring the drills and operating them.
In your opinion, did this expense support net Crown resource revenue?
Supported rents because it supported mining development. And it therefore, if you like, indirectly supported future revenues. That being said, it directly supported revenues as well because the department charged for these services when they offered them. You could rent the diamond drill and the services of the diamond drill, but you didn't get it for free. So there are direct and indirect. I think of it all as fairly direct, but there are two senses in which those expenses generated revenue.
What about assays?
We spoke about that before. That's chemical testing of ore samples, which is useful in the mining industry for estimating the resource potential of a property. And once again, these services used to be offered by the Crown. So testing laboratories were developed, particularly in the Timiskaming region, and offered, as I understand it, throughout the province. The provincial assay office used to be the main way that information was gained by prospectors about the value of their claims. But of course, it generated information for the Crown as well. They learned about mining processes through that, but they learned about the value of particular mining properties. And that in turn would have informed their ability to collect revenues from those properties. And it directly generated revenue again, because they typically charge for those services. So there are fee revenues booked in the public accounts for the assay office as well.
What about removal of squatters?
We include removal of squatters, which occurs in the public accounts for various years in the early 20th century. We understand that the term squatters meant something different to Crown lands officials than it does to us today. These aren't individuals who are occupying an unoccupied house or property. These were companies that were illegally harvesting timber from Crown land without the license to do so. And in the process, of course, not paying Crown dues or stumpage fees on them. That was referred to repeatedly in the reports of the Department of Crown Lands as squatters. Sometimes another term used was timber pirates. They were talked about as timber pirates or squatters equivalently. When we see in the public accounts that the department expended resources to remove squatters, when we see in, you're okay? When we see in the public accounts that the department expended resources to remove squatters, we believe that the Crown was asserting its rights to license timber harvesting and to collect revenues from it. And they were getting rid of poachers or tax evaders, if you like. So we include them.
What about forest insect control work?
This doesn't mean killing mosquitoes. It means dealing with forest diseases, insect-borne forest diseases that threatened the merchantable timber standing on Crown lands in the province. We first start seeing this in the public accounts in the early 20th century, but particularly after the rise of the spruce budworm in the late 1930s. So the first epidemic in Ontario, the spruce budworm, I associate really with the 1940s, but it's first discussed in ministry documents. It appears and this item appears in the PAO, I think first in the late 1930s. We're talking about forest protection activities here. When we talk about insect control, Mr. Hutchings excludes insect control. I do not recall if he gave any specific reason for it, but I want to be clear, we're not talking about mosquitoes. And I'm sure we would all pay to reduce mosquitoes, but that's not what the department was doing.
Long May weekend coming up with the black flies.
Mr. Hutchings said that insect control expenses were not large. Do you agree?
I reviewed portions of the transcript of Mr. Hutchings' testimony, and I believe he said that they were not large, and he cited an amount in nominal terms. So I'll say again, we have to deal with present value dollars in this case. Even in present value, the particular items labeled insect control in the PAO probably add up to a relatively small amount, millions, but certainly not hundreds of millions. I'll just point out that those expenses also existed inside the forestry branch. And Mr. Hutchings excludes most of the forestry branch, right? The fact that he excludes insect control, according to his methodology, allows him to exclude more of the forestry branch expenses. And so it's more consequential than simply looking at that one line item would suggest. The last point I'll make on this is that up to 1945, I might agree that it was not one of the most important expense items of the Department of Lands and Forests. Spruce budworm started in the late 30s, became important in the 1940s. The world famous forest insect laboratories were built at Sault Ste. Marie only in 1945. So that's the last year of his accounts, 1945. But the choices he makes up to 1945 then affect his estimates for the subsequent years. So we know that after 1945, the Crown spent far more on insect control, fighting spruce budworm, pine bundworm, and other forest pests. And in his approach, because all of that occurred after 1945, in his opinion, or virtually all of it, he excludes it in any case. He regards it as negligible. But the fact is, that's simply an error that's a result of his approach in stopping his accounts in 1945. So insect control is very important. He's already excluded the post-1945 expenses on other grounds, but in the process, he is missing that important component of what the department did in the post-1945 period.
All right, let's move on to slide 49. We talked about this a little bit earlier. Could you tell us about slide 49?
I think there are at least 3 slides in total on firefighting. As we've discussed, it's the most important single item of difference between us up to 1945. We include it in its entirety. We regard firefighting as part of the full cost of harvesting timber. And that's true in 2 senses. Engaging in firefighting and broader fire protection activity, it preserves standing timber, which will generate the potential to harvest it in the future and will therefore generate stumpage revenue in the future. It's also true that harvesting in the past has an impact on fires in the present. And so in both senses, we think there's a clear link between stumpage revenues, harvests, and forest fires. And the expenses that we're talking about are forest fire expenses. They are not municipal firefighting services. We've already noted the magnitudes here are large. 3.8 billion at our rates, 43 billion at Mr. Hutchings' rates.
So the 3.8 billion at your rates up to 1945, that's a large number. What does it mean for your overall calculations?
I believe you're asking me here again about the link between our province-wide accounts and our decisions about inclusion or exclusion, and then the implications of that for the RST area and our treaty NCR accounts. Is that correct, Mr. Hutchings? Mr. Lipton?
Well, I'm just wondering, just for the court's information, so you have this $3.8 billion expense that you would include in your opinion. How does that impact the rest of your calculation?
Right. Well, I will speak about the impact on the bottom line. If we thought in those relevant years, 20% of forestry activity was in RST.
What are relevant years? Sorry.
All the years are relevant. In this case, I was thinking of the later years up to 1945, because those are quantitatively the most important ones for forest fire expense. The reason I have to specify which years I'm thinking about is that both Mr. Hutchings and we know that the RST share changed over time.
So we're talking the 20s, 30s, 40s.
But we should be talking about all of them. And I will endeavor to do my best to talk about all of them in the way Your Honor is asking. So
No, I'm just going to your
Yeah.
statement. In the relevant years, 20% of forest activity was in the RST.
So for all of the years Your Honor just asked about, the share would be between, I think, 12% of province-wide revenues and 20% are believed to be RST revenues. And therefore, right, it changes over time, but we would take 12% of expenses in certain years and up to 20% of expenses in other years. And we might, therefore, for the purposes of answering Mr. Hutchings Lipton's question, I will assume 15% is the correct average RST share over these years. So for that $4 billion at our interest rates that we think should be included, to determine the impact on the bottom line calculation, we would multiply that 4 billion by 15%, be $600 million in present value in our NCR accounts for the RST area.
Okay,
That-
now I'm just gonna ask you to connect those numbers for me, please. 4 billion is 50% of the 8 billion difference.
4
Is that-
billion is the PAO province-wide fire management expenses.
Oh,
I just to interject on a point of clarity, is the 4 billion to 3.8 billion rounded?
Yes,
Okay, so,
oh, from slide 49.
okay, thank you.
Thank you. Got it. Okay, thank you.
so Mr. Lipton's question was, what does this have to do with the bottom line for your treaty NCR accounts? We would start with the figure on this slide, which I round to $4 billion, multiplied by our estimated share of expenses that are referable to RST, which I believe should be 15% on average over the relevant years, that is, years up to 1945.
The years, is that the years between 1898 and 1945?
Yes.
Okay.
And everything I'm saying in answer to your question is for the purposes of clarity. And therefore the numbers are not fully accurate. Right? All these numbers are in our work papers. We can be exactly precise about this question, but I cannot here now, sitting in this chair, be absolutely precise. But I have high confidence that these are the right orders of magnitude. So $4 billion province-wide multiplied by 15% estimated RST share equals $600 million in expenses in our treaty accounts, which serve to as a deduction, and therefore to reduce net crown revenues in the treaty area. Now,
Got it. Thank you.
now for Mr. Hutchings, the process is exactly the same, but because his interest rates are higher, the numbers change. We know that his rates, the fire management expense that we're discussing amounts to $43 billion over these years. His share that's referable to RST is roughly the same as ours. So I will again guess 15% is a useful indication share. And when we multiply these numbers together, 15% of 43 billion is on the order of 6 billion and some amount. That, therefore, is directly comparable to his final bottom line for present value NCRs. He says that they amount to 56.9 billion overall. Out of that, 6 billion, roughly 10%, flow directly from this choice to exclude these fire management expenses. And an additional large sum, though I don't know how much, flows from it indirectly through its impact on his post-1945 accounts.
I'm going to try and follow that if you don't mind.
Please.
So you Your numbers are, there's 4 billion province-wide of expenses for fire protection. Of that, 15% can be attributed to the RST, 15% of 4 billion is 600 million. Of excluded expenses in the RST. Excluded or debated expenses in the RST. Hutchings excludes, you would include
Correct, valued at our interest rates, Your Honor.
at your interest rates. And just gonna make a note. So, and then you say the process for Hutchings is the same. The process being province-wide, about 15% apportioned to RST. But at his rates, at his PV rates, get higher numbers, and you say that number ends up being
I believe the.
6, go ahead.
Just referring again to slide 47, the fire management expense at the Hutchings rate is referred to as 43.355 billion.
Right, and 15% of 43 is 6
Roughly
billion, you
6.
say, roughly 6. And that is comparable to the bottom line present values of whose NCRRs?
His, Your Honor, his total bottom line is 56.9 billion. And out of that 56.9 billion present value NCRs that he estimates, 6 billion and a little more flow directly from this decision to exclude these fire management costs.
Flow from that decision, which you say is roughly 10%. And
Yes.
okay, thank you.
So I'd just like to return for a second to slide 47. Now, of course, we understand that this 15% number that you've given is just your estimate, right? It's not exact. One would have to return to the work papers to come up with the exact number that both you and Mr. Hutchings would use over that 1898 to 1945 time period. But using that 15% number as a baseline, would it be correct to say that one could look at each of these debated expense items and roughly multiply them by 15% to arrive at the RST share for each of them?
It's a good question, but I'm afraid the answer here is no.
Okay.
It would depend on whether the expenses were classified as forestry expenses, for which the 15% share roughly applies, or mining expenses. Now, in this case, it's mainly forestry expenses that are itemized in the chart on slide 47. So it's mainly the case that multiplying by 15% would give you the bottom line impact on treaty NCRs. But for the category called research, investigations, and mine rehabilitation, of course, a lot of that category is categorized by us as a mining related expense, and the RST share of mining is lower in our accounts and his.
But the other items, other than the research, investigations, and mine rehabilitation, the other 5 items, one could apply roughly that 15% share to.
Yes, and I thank you for reminding us it's roughly 15%. I'll remind you that on slide 27, I reported the estimated average RST share of forestry by decade under both our approach and Mr. Hutchings' approach. And you will see that in the period from 1920 to 1949, in our data, it ranges from 9% up to 21%. And so 15% roughly is an average of those specific numbers reported in that table.
And there's a similar table on a nearby slide that shows the mining apportionment. Is that right?
The very next slide, which would be slide 28.
All right, so let's.
So can I just go back to
oh,
that
yes.
summary piece?
Yes.
So your comment that the 6 billion flows directly into the NCCR, can I say that 6 billion flows directly into Mr. Hutchings' computation of the NCCRs? That if you take his NCCRs, 6 billion of it is explained by a decision to exclude forest management or forest fighting expenses?
Fire management expenses.
Fire management.
Yes, Your Honor, I think what you said is fully correct. And I think I can be slightly more explicit. I can say if Mr. Hutchings had included those expenses, then his bottom line treaty NCRs under everything else according to his approach, instead of being 57 billion, would be approximately 51 billion.
Would the number, Mr. Hutchings' ultimate number, be further affected by that decision because including the forest fire fighting expenses would also affect his post 1945 ratio?
Yes, so that's the uplift factor we talked about. And in describing how we arrive at the $6 billion direct impact, I mentioned that it would then have this follow-on impact on his NCRs in the subsequent years. Unfortunately, I don't know enough about his work papers and his specific numbers in his accounts to tell you how large that secondary impact would be. But as I think I said before, I think it would probably be even larger than $6 billion in present value terms. I think. That is, to clarify, if I may, even larger again. The direct 6 billion plus an additional sum, which I would not be surprised to find was itself larger than $6 billion, the additional. That is pure conjecture. I have not done those calculations.
Thank you.
But if it would be helpful for the court at some future point, those calculations could be done.
Okay.
So let's move on to slide 50. Could you please tell us about slide 50?
So I've said why we include fire expense. Mr. Hutchings doesn't include it. Well, in fact, he does include it up to the year 1916, but not thereafter. And in his report, he wrote that the reason for that was a change in policy. He wrote that with, quote, the Fire Protection Act in 1917, the government began collecting a specific tax aimed at suppressing forest fires, after which point I exclude all fire-related spending. So the Crown collected a tax, he says, beginning in 1917. After that point, he no longer includes fire management costs. To us, Mr. Hutchings' reasoning, at least as it's explained in this sentence, it doesn't make sense. In our own accounts, we include revenue and expense for the reasons that we've stated, and we don't stand in judgment on the Crown's policy choices. Doesn't matter what the Crown decided about how much of those expenses should be recovered from the industry or from other parties, through other revenue measures. The revenues and the expenses are either in or out based on whether they supported the relevant activities or not. We also think, I think there's a suggestion in what Mr. Hutchings wrote that, well, the Crown now had the ability to charge the license holders through the fire marshal's tax. They had the ability to charge the license holders to put out fires on licensed Crown lands. Therefore, any expenses that they incurred, in addition to those, in excess of those revenues, were for some other reason other than supporting timber revenues. Mr. Hutchings doesn't say that. I'm making that inference based on this statement about the 1917 Act. And if that is his meaning, I don't think it makes sense. The Crown cannot be so selective in its fire management activities and its firefighting. They have to engage in efforts to detect and then to extinguish fires on both the licensed tracts of land in the province and the unlicensed tracts of land. they could only charge the license holders for fire management on the licensed lands. But all these other timber lands, that they still would have to engage in those activities for the unlicensed lands, and they wouldn't have any means of recovering those costs. Moreover, fire spreads. So fire not extinguished in one area would tend to spill over into the other area. So to us, this distinction suggested by Mr. Hutchings of there's a tax that could be charged to the license holders, it just doesn't affect the way we think about this category. I'll note that around this time, around 1920, in the province, the department estimated that there were 70 million acres of merchantable standing timber in the province, of which 10 million were under license. 60 million, there was no license holder, no ability to charge fire tax. And yet the department believed that there was revenue potential in those acres. They say merchantable timber, not under license, was, excuse me, I'm going to correct myself. I believe that the statistics I'm quoting are 10 million under license, 70 million not under license. So only 1/8 of the total was under license.
Is your, I'm not exactly sure I fully understood it, but is the inferences you are drawing, are they based on a presumption that the province never let fires burn, but just let them go? They saw a fire, they identified it, they looked at their map, and they made a decision, we're gonna let it burn. Just to say, that's not my understanding of how Northern Ontario has been managed, but is that the assumption that you're basing your comments on?
No, Your Honor, you're absolutely right. Fire management practices sometimes involve letting it burn. And the Crown's approach to that, scientific approach to that, has changed over the years. Perhaps now it's more common to let it burn in certain cases in a controlled fashion. But that policy choice, it's not relevant to the issues that I'm raising now, whether the Crown chooses to fight any individual fire or not fight any individual fire. Two things are true. First, they must detect the fire and they must manage that fire, even if it's allowed to burn. That costs. Second thing is that fire, whether it's allowed to burn or it's extinguished, might be on licensed land or unlicensed land. And the Crown really can't make these distinctions and only engage in firefighting on a subset of those lands because fire spreads. So if the Crown wished to only
No,
protect,
if you agree that sometimes they let fires burn, there must be a reason for that. Whether it's possibly, isn't it possible the decision is it's licensed or not licensed? So it's not thought of as merchantable timber or not?
I understand Your Honor's point better now, and I will concede that. If, for example, a certain tract of land were surrounded by licensed land, the Crown might make a different choice about whether to fight that fire or not. I agree with that. In general, however, they don't have such precise control over where fire is allowed to burn or not. Forest fires, of course, are unpredictable. A portion of the firefighting activity will have to occur even on the unlicensed lands.
But when I listen to you, it sounds like there's an assumption that they fight every fire because they either can't make a decision on whether it's, they're prohibited from basing their decisions on whether it's licensed or not, or they've made a policy decision not to base it on whether it's licensed or not. I don't know what the decision is. It's just not unknown, and historically not unknown. We hear of fires in Northern Ontario, and the open public statement is that it's being allowed to burn.
The underlying question that I'm trying to answer here is whether firefighting costs, fire management costs more broadly, can be thought of as supporting Crown revenues at some date in the past or in the future. And I believe that Mr. Hutchings is saying, if firefighting supports revenue, then it must be extinguishing fires on licensed lands. And after 1917, the Crown had the capacity to charge all of those costs back to the license holders. And so I'm trying to suggest the reasons why that thinking is inappropriate. And the reasons I think it's inappropriate are that even among the unlicensed lands, Mr. Hutchings would say, well, any expenses that are left over, it must have been for fighting fires on unlicensed lands, or at least implicitly, a choice not to charge all of the costs on the licensed lands back to the license holders,
Okay.
which Mr. Hutchings would also think is, well, that's not my problem, right? But I don't think he thought it through entirely, right? So the unlicensed lands, he thinks, well, if you're still spending money, it must be for those unlicensed lands. They could be licensed in the future. They could have been licensed in the past, and past harvesting practices might have increased the risk of fire today. I will present evidence in a minute that that's true. And third, in at least some cases, the Crown might reason, if we let that fire burn, it will eventually burn out of control and affect even our lands which are licensed today. And so for all of those reasons, I believe that the Crown's expenses to detect and extinguish fire, even on unlicensed lands, should be included.
Thank you.
Professor Smart, in your discussion with the court, you mentioned how fires need to be detected and managed. Do you know how the Department of Lands and Forests tended to detect and manage these fires? Like, what tools did they use to detect and manage the fires?
Well, they hired fire rangers and then supervisors of those fire rangers. Sometimes the fire rangers, so this would be the individuals who would during the fire season, during the summer, would be resident in the forested lands. Sometimes those were employed by the license holders themselves. So they were not expenses borne by the Crown, but in other cases, they were directly employed by the Crown, and the supervisors were always employed by the Crown. That was one portion of the management strategy, one portion of the costs. As well, of course, they had to help those people detect fires, so they would build fire towers. There's a great effort around the middle of the century to build fire detection apparatus. And if you go to this day and you're brave, some of them are still standing, you can go and stand up and you realize that you're able to see far. So you see across unlicensed and licensed lands when you're there.
I commend the Tomogamy Fire Tower to me in the area.
Which one is it, Moose?
Tomogamy
Yes,
Fire Tower.
I've been too afraid.
How far up?
Climbing?
Yeah.
15 minutes.
Then, of course, you have to let these people communicate. And so there was a radio service that the Crown started, which allowed them to communicate. The radio service was then supplemented with various points that were telegraph services as well. So they would actually run wires to remote forest stations in some cases, and so on. Then lastly, of course, we should think about the air service, whose function was to detect, and then in some cases later on to extinguish fires as well.
All right, and we'll talk more about the air service later, I think. So I think returning to slide 50, I think you were discussing one of the sub-bullets of the second main bullet.
Right. Well, I think we've gone through all of those sub-bullets except for the last. We talked about the reasons why we think the 1917 change that Mr. Hutchings pointed to is not consequential for the way we think about it. The last thing I'll say is, I believe he's simply wrong. He says, after the 1917 Act, the government began, he said, collecting a specific tax aimed at suppressing forest fires in 1917. But in fact, fire management costs recovered from license holders, that begins in the public accounts in the year 1892. There might have been a change in the form of it. There was a change in the form of the tax with the 1917 Act, but it was not when the Crown began doing this. And so it seems like a very arbitrary point at which to cut off his accounts.
When you say fire management costs from license holders begins, it's recovery of. So through a tax or just a chargeback, something like that.
I think more the latter, Your Honor. was, at least for some years in the 19th century, a policy that costs would be shared 50-50 with license holders.
Thank you.
Can you tell us about slide 51?
Still on fire. In reviewing Mr. Hutchings' demonstratives, I noticed that he made a suggestion, which I regarded as a new suggestion that I didn't see in his report. He wrote on slide 144 of his demonstratives that he omitted fire protection expense in these years, quote, because I cannot reliably separate the portion of fire expenses related to direct Crown resource revenues and those related to other Crown priorities. And so this is the issue that we've already been discussing. This question of the other objectives the Crown had in mind and what changes in our accounting approach should flow from recognition that the Crown cared about the possibility of forest fires would hit towns, right? Which we certainly agree that they would have cared about that. I've already given the reasons why we don't think in general there's any need to change our approach to fire because of that. We believe those expenses were necessary to support rents and revenues. That being said, what Mr. Hutchings is saying here is that he acknowledges that there are different motivations, including protection of standing timber, but that he does not have data that would allow him to reliably apportion expenses across those objectives if he thought it was appropriate to do so. And I was struck by that statement because I think we have a lot of data on that. I think that the reports of the Department of Lands and Forests tell us a lot about the location of fires and the types of fires. And I'm going to suggest that Mr. Lipton, quickly go to slide 52 if you wish. The point here is, seems to be information that would allow an
Oh,
apportionment.
sorry, just us. Could we go to slide 52, please? Can you tell us about
Yes.
this slide?
So I've just said we do have data from the ministry reports. And so here's an illustration of the kind of data we have. This is a table from the 1921 DLF, Department of Lands and Forests report, together with a paragraph from the prior page, which describes the tabular data. And so for each of the consecutive 5 years, they report what kind of land, the types of the classification of the lands that were burned in the province. They break it down into timberland. So that means standing timber, typically under license, although not necessarily so, but where there had not been any recent harvesting activity. The next category, cut over land with some timber left, means exactly that. There had been some recent harvesting. Third category, young growth below 6 inches, of course, means that there had been some regeneration following harvest activities. The fourth category, barren and grassland. Barren land, they seem to encompass many different things here. It includes muskeg in Northern Ontario. And I believe it also includes cut over lands where they did not expect any regrowth in the future. These are categories, whether rightly or wrongly, that fourth category, but ones where they think, well, there's no further revenue potential there. But the first three categories, there's current or future revenue potential in those lands. And in two of the categories, there's been recent past harvesting activity. And overall, over the 5 years shown, those first three categories add up to more than 50% of the total in all years. The first three categories add up to 60 to 80% of the total in all categories. I'll call the court's attention, if I may, to some of the words written by the ministry at the time to describe the data. They call attention in particular to cut over land and young growth and their shares for the 1921 year. And then the department wrote, it is upon those two classes of land that we must depend to a large extent for our future timber crop. And so we need to protect those lands. Then it says, until a systematic system of brush disposal is inaugurated in connection with logging, little can be accomplished in the protection of these cutover areas. So I draw two conclusions from that. First, deciding about fire policy, 1921, period excluded by Mr. Hutchins, Crown was thinking about merchantable timber now and in the future. And they regarded that as a large percentage of the lands that were at risk of burning through forest fires.
And they regarded that being merchantable timber now or in the future.
They regarded the share of lands at risk of fire as being a lot of it, of the type Your Honor described. The second inference that I draw from this is that they recognized that the harvesting practices in the past increased the risk of fire. They talk about brush disposal. Another term used at the time is slash, the idea that a lot of dry forest material was left on the forest floor after harvest, according to the practices of the day, and that slash increased the risk of subsequent fires. Economically, to me, that means that brush disposal or fighting fires is part of the full cost of those past harvesting activities. I said before, we think that the fire management is referable either to the future revenues or to the past revenues of the Crown.
When you say brush disposal for fighting fires, brush disposal as a fire prevention method was a full cost of harvesting activities?
Yes,
Got it.
I believe that's what this sentence says.
Okay.
Was this kind of data in Department of Land and Forest reports in multiple years?
Yes.
Could one use this kind of data to separate the portion of fire expenses related to NCRRs and related to other priorities?
It would require assumptions and calculations of various kinds. I don't know how I would do it, but I think it is a basis for a form of apportionment if one thought apportionment of these expenses was appropriate. And those forms of apportionment would be parallel to the apportionment we're already doing. I don't think that these expenses should be apportioned, but when we needed to apportion buckets of spending in other aspects of our accounts, we took an approach like this.
And the source for these data, what is it? The Department of Land and Forest annual reports?
Yes.
Do you know if Mr. Hutchins read the Department of Land and Forest annual report?
I'll object to that question. I don't think he would know what was in Mr. Hutchins' mind unless the witness is going to say that he talked to Mr. Hutchins on this subject.
The question you can ask is, was there reference made in the reports?
Thank you. Was there a reference made in Mr. Hutchins' reports to the Department of Land and Forest annual reports?
Yes.
Let's return to slide 51. What else would you like to talk about on slide 51?
Well, I think the last bullet is what we've been already talking about. Mr. Hutchins includes none of it. In his reply report,
Sorry, none of it.
none of the fire protection expense that we have been discussing in his accounts includes 0% of it.
We don't like pronouns in this court.
Okay. And that's more and more true over time for all of us. So what I'm suggesting here is that although he includes none of it, of the expense, he does raise this issue of apportionment himself in his reply report of September, I believe it was. October, thank you, Mr. Lipton. And in that report, he wrote that 80% of these expenses might be included. In this case, this is my paraphrase, and I wish that I'd had room on the slide to give a direct quotation. I hope I am not misquoting what Mr. Hutchings wrote in that report in paragraph 91, but certainly he contemplated including 80% of these expenses if they are not fully excluded. But to be absolutely clear, he certainly believes that they should have been excluded, and that's what he did.
%80 of these expenses might be included if they are not fully excluded.
I believe that correctly summarizes what he wrote in paragraph 91 about the issue of including forest firefighting expenses in the alternative if his own approach were not adopted.
If his own approach of not fully excluding firefighting expenses was adopted, he would include 80% of them.
Again, I wish that we had a direct quotation from that paragraph, other
But
than
that-
those 4 words.
That's what your understanding of it is?
That's my
Tom?
understanding. Thank you.
Okay.
Ron.
Thank you so much. Oh, it's pretty long. Okay, so this is Mr. Hutchings' reply report of October 31st, 2021. I'm not going to read the
You
whole.
could give it to the witness, see
Oh,
if
sure.
that's what he still wants to use as a summary comment.
Thank you.
Is that all right with you?
Yes, thank you.
Very good. Thank you for the time. Do you want to pose any particular questions to me, or would you like me to just
Would you-
proper?
Oh, sorry.
Or would you summarize that
All right. So,
point the same way?
I mean, I'll just speak to what I wrote on the slide.
Okay,
What I now believe I wrote, he suggested 80% might be included. Specifically, he wrote, a conservative approach to apportionment would be to exclude 20%. So he contemplates excluding 20% and including 80%, but he characterizes that as conservative in this context. I'm not sure what he means by conservative, but that's what he contemplates in this paragraph.
Does Mr. Hutchings do the calculation of including 80% of the forest firefighting expenses?
I don't believe in his reports or his work papers, he ever did a calculation of NCRs on that basis of 80% inclusion. Not to my knowledge.
All right, we've already discussed slide 52. So let's move to slide 53. A full screen, please. Tell us about slide 53, Professor.
So we'll move on to the air service more briefly than fire management. It's excluded by Mr. Hutchings. Let me just start with a 1-sentence quotation from the 1947 Ontario Royal Commission on Forestry report, sometimes called the Kennedy Report. Mr. Kennedy wrote, to introduce this subject, he wrote in 1947, the Provincial Air Service is a separate division from that of forest protection, but its primary function is for the detection and suppression of forest fires. Now, we include 80% of air service expenses in this period. Mr. Hutchings includes 9% of air service expenses. And Mr. Hutchings is behaving consistently here. He believes fire management should be excluded based on the issues we just discussed. That's his belief. And because the Air Service spent most of its time on fire management, he excludes most of its spending. We, on the other hand, think it and other things should be included, and we include 80% of it in total. So beyond that, there is not much to say. I'll remind the court that the present value of the difference between what we include and what he includes is 245 million at our rates and 1.9 billion at his rates. That's province-wide.
Speaking of those province-wide numbers, just to sort of reemphasize a point we discussed earlier, would these be numbers where if you wanted to apportion these numbers to the RST, you would multiply it by approximately 15% because this is a forestry-related expense?
Yes, it's a forestry-related expense, which mainly occurred around the same years that we were discussing before, from the 20s through 1945 in his accounts. And so the 15% average before would very likely apply here as well.
You said the air service was primarily used for the detection and suppression of forest fires. Were there other functions that the air service was used for?
A variety of functions, which we regard as includable and excludable. The ones that we include, the activities we think should be relevant here, are listed here in the main part: fire ranging, fire suppression, aerial surveys, forest research, insect control, which included aerial spraying, and what I've called here administrative overhead, which indeed the department called administrative flying. But the next slide in my deck gives some details on what those administrative hours are.
Before we get there, so in terms of these various functions of the air service, did those expenses related to the air service's various functions support NCRRs?
Yes, they supported the forest in scientific and economic terms, which in turn supported rents from forestry, supported harvest activities, and those activities in turn that were being supported generated stumpage revenues in future years.
All right, let's go to slide 54. Please tell us about slide 54.
I'm sorry again that it is so small, but this shows you the basis on which both Mr. Hutchings and we reached the conclusions that we did about the included share, the share that should be included. And these figures are reproduced from my own accounts. They correspond exactly to information that was in a particular annual report of the DLF. And they give aggregates of activities for the years 1949 through 1964. We have similar tables for earlier years as well. The air service was established immediately after World War I, I believe. So it tells us a lot about what the air service was doing in the years up to 1964. They categorize the activities in the ways that you see here. There is an administrative category in the table, which then a subtable, a subsequent table, gives further details on. So in their administrative category, they included hours spent flying for various purposes, including mercy flights, research, including entomology, photography, and so on. And so we simply used these tables to determine the share of flying hours that we think should be included because they supported resource rents. And we included that share, or 80% overall for all the years. We included 80% of the expenses on the basis of this table. Mr. Hutchings did a very similar exercise using these same tables as I understand it. But as I said before, he doesn't regard fire ranging activities or fire suppression as includable. And so he doesn't regard the hours the air service spent on that as relevant. So he arrives, there are a few other ways in which his included flying hours differs from ours, but really it comes down mainly to that. to the choice on fire hours.
What type of flying hours does Mr. Hutchins include from these data?
Timber management, which, as I said before, is wood scaling, it's estimation of values. And I think he may include the category here called lands.
And just looking at the top table on this slide, the rightmost column is entitled "No Recovery." What does that mean?
We always have to think about, in going through these accounts, if we see a recorded gross expense, would there be a revenue, would there be some recovery of that expense in some other place in the government's accounts? And so in preparing this table, I tried to make those determinations. And in particular, I noticed that there was an interdepartmental flying hours category in the table, which means that because DLF had all the airplanes in Northern Ontario, if another ministry wanted to get to a remote location, they would use DLF's air service to do so. And in at least some of those cases, those other departments would have reimbursed DLF for the expenses of that flight. And that would occur as a revenue or as a netting out of expenses that occur in our account. So if there were recovery of these expenses, for example, in the case of interdepartmental flying, that even though that was not a relevant expense for reporting resource rents, it also didn't generate any net expenses. So I tried to determine whether those expenses would incorporate recovery or not. In the end, I do not recall whether I used that information for determining the 80%, but you can see that there's only a few categories where there would be any recovery, and it has a relatively small impact on the bottom line.
Just so that we're clear, when you refer to DLF, do you mean the Department of Land and Forests?
Yes, the Department of Lands and Forests.
Let's go to slide 55. Tell us about slide 55, please.
Next category, forest reserves. Mr. Hutchings excludes forest reserves on the basis that he regards them as similar to parks. However, the forest reserves in Ontario were established under the Forest Reserve Act of 1898, which authorized that Crown land be set aside, quote, for the purposes of future timber supplies. Therefore, we regard expenses related to forest reserves, which would be in some cases acquiring land for the Crown and then designated as a reserve. In other cases, it involved forest ranging activities, game management activities. Well, we don't include game management activities, but that's what the Crown was doing in the forest reserves. So these various expenses we regard as an investment in future timber revenue, just as they would be on any other Crown land, because the intent of the Forest Reserve Program at the time was to set aside lands for future timber supplies. And just one more sentence of context, it's really around that year in the late 1890s that the modern conservation movement in North America was born in Canada and the United States. The idea that the practice of harvesting virgin timber stands and allowing private harvest to continue unchecked on those lands, that activity might be unsustainable. That was a new idea introduced into the public discourse in the 1890s, which I believe prompted this act. And it wasn't, in saying that, I'm not saying that they regarded that as, in saying that, I'm suggesting that they wanted to smooth out the revenues over several generations. They were concerned that all the trees would be gone soon and that there would be no forest industry and no timber revenues in Ontario after that happened. The forest reserve policy was part of an attempt to ensure that there would still be a forest industry and forest revenues in subsequent years.
Did Mr. Hutchings respond to your analysis?
No, we raised this in our report and in Mr. Hutchings' reply report. We didn't see any reference to this issue.
What's the present value of this difference?
At our interest rates, forest reserve expenses, 1898 to 1945, is $352 million. At Mr. Hutchings' interest rates, that figure becomes $5 billion. Both of those are province-wide.
At risk of repeating myself, this is again a figure that if you were to apportion it to the RST, you would multiply these amounts by approximately 15%. Is that right?
In this case, I would probably choose a smaller share than 15%, somewhat smaller, 10% perhaps.
Let's move on to slide 56. Could you please tell us about slide 56?
It's about reforestation expenses. I already talked about the general principles here. Reforestation means the planting of trees, research to support the planting of trees. We regard it as referable to revenues from harvests in the past or harvests in the future. Mr. Hutchings believes it should be excluded. Now, he raised a separate point. He claimed, I believe in his reply report, that there had been no reforestation within the RST area before 1945. He made that assertion, and he cited, and he displayed indeed in his report, his reply report, a single map, which he believes illustrates his point, or perhaps even proves it. There's a single statement that he quoted from the 1943 annual report. And so we disagree on the issue of whether reforestation should be included. And we disagree on the assertion that there was no reforestation before 1945.
Reforestation, does reforestation support NCRRs?
Yes, as I indicated in my previous answer, we believe that reforestation helps the forest to recover from previous logging, and it grows new forest that may be logged in the future.
And what's the present value of this difference?
$862 million at our interest rates, 8.3 billion up to 1945 at Mr. Hutchings' rates.
Are those province-wide numbers?
Yes.
And to allocate those province-wide numbers to the RST, you'd multiply them by what percentage roughly?
15%.
Let's move on to slide 57.
More on reforestation.
Sorry, let's just give the court a second.
Yes, thanks. Thank you.
Go ahead, Professor Smart. Please tell us about slide 57.
I will dig a little more into this claim that there was no reforestation before 1945 within RST. So in our accounts, we start counting reforestation expenses beginning in 1921 from our province-wide accounts. We then apportion it to RST in the way Mr. Lipton just asked me about. Was there reforestation? Well, the annual reports of the department first refer to tree planting in Northern Ontario in the year 1925. There is an administrative history of the DLF, which was published in 1967. It's referred to in both our reports and in Mr. Hutchings' report. It's the Lambert and Pross reference in the footline of this slide. I regard it as authoritative on the administrative history of the department. It was published by the department, but the authors were independent scholars. They didn't work for the department. And so I believe what the Lambert and Prost book tells me. That book says that large-scale replanting began around Sault Ste. Marie in the 1920s. Subsequent research leads me to believe, in fact, the year is 1928, that first large plantations were established around Sault Ste. Marie. Regardless, much of the early reforestation expense province-wide was for research and not for the specific planting of individual trees. And research is a public good that benefits all of the province and all of the industry across the province in proportion to its forested area. So the things that the department learned about silviculture and reforestation practices in this period, even if they were learned at a research station in Southern Ontario, still contributed to the growth of trees subsequently within the RST, and therefore to future revenues.
In your second bullet, you mentioned that the annual reports suggest that there's tree planting in Northern Ontario as early as 1925. In the footnotes footer of your slide, I see it refers to the DLF annual report 1926. Is there a typo? What's the discrepancy there?
I'm afraid I don't remember exactly, but I would conjecture that the report published in 1926 referred to the activities of the department in the year 1925.
I see. Let's go to slide 58. Could you please tell us about that?
This is a grab bag of other expenses excluded by Mr. Hutchings that we believe should be included. And we've already talked about some of them, but I want to say a little more if I may. I would highlight mining rehabilitation. In Mr. Hutchings' accounts, mine rehabilitation is excluded, quote, because, and now I'll begin the quote, which comes from Mr. Hutchings' reply report, paragraph 97. He wrote, I excluded mining rehabilitation because, quote, rehabilitation is a policy decision to make mining pits less hazardous for citizens and does not ensure further mineral extraction. In my opinion, that sentence fails to recognize that mine rehabilitation is part of the full cost of the extraction activities that occurred earlier on. Certainly what he wrote is correct, but I don't think it corresponds to how we should think about these expenses. We should think about a life cycle investment made by the private sector and the Crown together in a mining project. Starts with the extraction activities, and then it ends with the rehabilitation activity.
Would you say that's a modern view?
Well, no, Your Honor. I mean, yes, I think it certainly is a modern view. It's how economists and public sector accountants talk about government's investments today. For example, we buy an F-35. We think not only about the acquisition price, we think about the future maintenance costs. But I think it must be part of how the Crown thought about these activities in the past. The evidence for that is they were spending money on mine rehabilitation. So they were cognizant that in some cases at least, they would be required to expend sums out of the CRF for mining rehabilitation. And so I would presume that
That's
those,
a tautology, is it not? They must have been thinking about their end responsibility because they spent money. Whereas the counter proposition is they spent money to prevent hazards.
oh, okay, I'm not, I'm not speaking about the Crown's intent in doing that. And,
Okay.
but both, so indeed not. So even if the Crown, indeed, I would go so far as to say, we, today and in the past, the Crown spends on mine rehabilitation to remove hazards that could harm people.
Mhm.
That's their intent. What I'm saying is that the correct interpretation economically of those expenses is that they are referable to past extraction activities in the sense that if the extraction had not happened, the rehabilitation would not be necessary.
Thank you.
The next item here, research inquiries commissions. These are these policy bodies that we talked about, plus various scientific research activities. Mr. Hutchings tends to lump them together, and I can lump them together here because we include virtually all of them, whereas he excludes them. So our view is that research, whether it's research on the science of resource management or on the policies of the Crown, increase resource values, improves the practices of the ministries, or improves the policies of the ministries. And all of those activities support revenues. They support rents in the first instance, which in turn supports revenues. Or in the case of policy research, I think it supports revenues directly. It helps the Crown develop better policies. And as Professor Stiglitz's report makes clear, there are good policies and bad policies for trying to appropriate rents to the Crown. So let's invest in research on that point. And these expenses are pretty clear in the public accounts, and they're pretty substantial. So I've given one example in this slide of the Royal Ontario Nickel Commission of 1917. Most of the report of that commission was about how the MPT should be reformed to appropriate more of the rents to the Crown.
Is there any nickel in the RST?
There isn't, but there is to my knowledge, there has never been a nickel mine that paid MPT in the RST, but the principles of the Royal Ontario Nickel Commission, the principles they discussed, informed changes to the MPT itself, which applies to other metal mines in RST. There are other examples of such commissions excluded by Mr. Hutchings. I may offer another one. 1921, there was the Shevlin-Clark Commission of Inquiry. That's in the public accounts, excluded by Mr. Hutchings. The job of that commission was to investigate financial irregularities that were believed to have reduced the amount of stumpage revenue paid by the Shevlin-Clark Company on licensed Crown lands. The whole purpose of that commission was to try to generate revenues and to prevent financial irregularities, indeed alleged corruption, which led to revenues not being collected.
What about services to mining? What's that about?
We've discussed this before, assays and diamond drilling and so on. Mr. Hutchings excludes those based on his principle that 100% of those costs were not recovered. We include them because our principle is they supported rents and therefore supported revenues. Now, I'll note that Mr. Hutchings' principle, he says, permits him to exclude the expenses. It doesn't say what he should do with the associated revenues. In these cases, he excluded the expenses on the assay office and on diamond drilling, on the testing laboratories, but he included, at least in some cases, his work papers make clear that he included the associated revenues. Again, that's consistent with the principle. The principle is I will exclude the expense because there's less than 100% recovery, but I think it's a surprising application of the principle.
And so what is the effect of Mr. Hutchings applying his 100% recovery rule in these instances?
You're asking me about the quantum of the calculations. I recall that from the slide from the chart on slide 47, we're talking about 1.2 billion, but I'm going to verify that if I may. $1.2 billion for research, investigations, and mine rehabilitation at our interest rates, and 14 billion at his interest rates. In this case, because it's a mix of forestry and mining, it's very difficult to give an accurate estimate of the impact on bottom line treaty NCRs. But it would be, I would guess, less than 10% of those amounts. So for example, at Mr. Hutchings' interest rates, 10% of that amount would be 1.4 billion contribution to his final NCRs in the treaty area of 56.9, but I suspect it would be even lower than 1.4 billion in this case.
So let me just see if I get that. If the, answering Mr. Lipton's question, the effect of applying the principle of 100% reasonable recovery expectation is 1.2 billion at your rate and 14 billion at Mr. Hutchings' rate. 10% of that amount is attributable to the RST. Then you said, and that has what effect on? Then you gave me a number.
At
for
his
the
rates,
NCRRs.
an amount up to 1.4 billion,
Mhm.
but likely lower than that.
1.4 billion on the NCRRs, but possibly lower.
In the RST, yes.
I don't think it was 1.4 billion. It's 1.4 billion up to that amount on the NCRRs on a present value approach.
Yes, on present value.
Yeah.
Thank you. Thank you.
Right, I think we've already talked about insect control, so let's go on to slide 59. Please tell us about slide 59.
This is about nominal versus present value estimates. And we've talked about this several times already today, including in response to the recent question. So I'll be brief. I noted that in his demonstratives, Mr. Hutchings seemed to acknowledge that some of these items that we're talking about that he excluded might properly be included, but he dismissed the quantitative importance. So the particular ones he talked about, I'm not saying that he's conceded any points, but he talked about insect control, mining, in his terms, rehabilitation, removing squatters from the land, and forest reserves. And he argued that he didn't argue, but rather reported the impact of correcting those exclusions in nominal dollar terms. And at the risk of sounding too much like an economics professor, I want to remind people that we cannot do this in nominal dollar terms because amounts of different years have different meaning. Dollars of different years have different meaning. We must convert to a common value to reflect the time value of money. And that's what our present value analysis does. Small nominal amounts in the early years can have a big impact on the present value accounts because it happened a long time ago. Interest compounds over many years. And if it were compounded at the very high annual rates assumed by Mr. Hutchings, even very small amounts turn into very large present value amounts. So that's why we've done it all on a present value basis, even though I have not yet talked about our principles of computing present values.
Could I just provide to the court through the registrar, just so that we're clear what we're talking about, slide 211 of the Hutchins demonstratives. This, Your Honor, I believe may actually be the demonstrative slide that you were referring to earlier when you said, did Mr. Hutchins prepare a similar comparison? I think this may in fact be what you had in mind, although previously I'd referred you to slide 186.
And what is the number on this one?
It's 211.
211, thank you.
If we could have it up on the screen, that would be great. If you, in the PDF, it's 212 in the it's PDF page 212. Oh, one back. It's it's, yeah, slide 211 PDF. So this is what Your Honor is looking at. This is what we're now all looking at. And this is what Professor Smart was referring to earlier, where Mr. Hutchins talks about various expenses that he might admit should be included. Professor Smart, you say these expenses here, are they listed in nominal dollars?
Yes. So he gives his nominal dollar included expenses. That's just adding up nominal dollars of all the years from 1850 to 2019, if I understand correctly. And then he examines the impact of the change in that nominal sum that would flow from including certain items.
And the impact that he lists and the impact that he shows as a percentage of one, the percentage number, these are all nominal dollar. This is all based on the nominal dollar amount. Is that right?
Yes.
Do you think it would be more helpful for the court if Mr. Hutchins had presented it in present value terms?
Absolutely. You just can't do this exercise with nominal values. Looking at nominal values here is deceptive. It's not informative in two distinct ways. So first is the numbers look small, whereas from a present day perspective, those small numbers were big to them, right? Including interest, they turn into big numbers. The second sense in which you can't do it is the percentage amounts are wrong as well. So in his final column, he shows the nominal change as a percentage of the nominal total amount over all years. But now the numerator and denominator refer to different things. The numerator would be about dollars in the particular years in which there's a disputed inclusion. The denominator would be some kind of random average of the meaning of or the value of dollars for all the years in its accounts. So we just can't divide one by the other and present a percentage here. It would
So you
never be
say-
standard economic practice to use nominal dollars in this way.
So you say by using nominal dollars in the first column, where it says nominal, then the third column over entitled impact as a percentage or impact as percentage of the amount in one is not reliable.
I would call it wrong.
Okay.
But precisely, I can state that if this were done with present value dollars instead of nominal dollars, those percentages would be very different. They would be different, and I suspect that they would be substantially different.
Different in what way? Higher?
Higher, yes, because the amounts that are being included by us, excluded by him, refer to early years where a dollar had a greater value, right? Once we convert it to present day values, that exclusion becomes bigger. Whereas the
Well,
total
isn't it
of
so-
all things that he includes on a nominal basis are mainly in the later years.
Okay, so I'm just trying to understand the challenge to this column called impact as percentage. You say, if I get this, you say it's wrong because it's based on Mr. Hutchings' rates. But if it's in nominal dollar, if all of the columns are in nominal dollars, how can one be wrong?
Because dollars have different meaning at different dates. And it would never be the practice of an economist to add together or to divide dollars of different years without making some adjustment for those differences in prices and differences in the time value of money. It would be equivalent to someone saying, well, I have all the feathers and you have all the gold bars. Therefore, I have 50% of the mass and you have 50% of the mass. But of course, feathers and gold bars are in different mass units. So here too, dollars are in different value units. We can't make those comparisons without some form of adjustment. And that would be the only practice, not just the standard practice, but the only practice of an economist in a case such as this.
I'm still missing it. if, if the third column is not expressed in present dollars, how is it, isn't a percentage arrived at by a arithmetic computation?
Yes, and that computation, I am suggesting, has no economic meaning.
Does it have an arithmetic meaning?
Well, we can always add things together, and then we can assign a certain meaning to that if we wish. And
Okay.
I'm saying that there would be no economic principle by which I could assign a meaning to these percentages.
Okay, so maybe it doesn't present an economic principle. I'm just trying to figure out if you're putting before me a chart that shows presumably properly labeled, properly identified nominal values. Is your problem with this chart the first column then? That it's nominal, that nominal dollars are meaningless?
I wonder if I could offer an example to Your Honor of the kind of calculation we're doing here, and therefore the reasons why I think it's wrong. One could say the Crown spent $300 on insect control in 1930,
Okay,
and they spent $300 million on insect control this year. Those numbers are not correct,
okay,
but of course, I want a dramatic difference in those numbers. $300 versus 300 million, the percentage of the number in the first year is 1/1,000,000th of the amount in the second year. But I could not say on that basis, well, all but 300 over 300 million occurred this year, because the dollars of those two different years have different values. First reason those dollar amounts have different value, simply the effect of inflation. So the services that were purchased with $300 100 years ago are different than what could be purchased with $300 today. Every economist would recognize that there would be a need to adjust for those differences in the prices or the cost of services over time. As well, in this case, because a very high percentage of the amounts in this case are interest on amounts in the past rather than the principal associated with that, we recognize that we must also adjust in comparing dollars across years for the associated interest that would be generated by a decision about whether to include that $300 100 years ago or not. We just always recognize that we must convert a dollar in the year of 1930 or 1923 into an equivalent present value number of dollars today. And in making comparisons across years, we must first make those value adjustments before numbers could be added together or one divided by another. And I've tried to be careful in doing that. The only time I've talked about nominal values, I've talked about a particular year or an average of a decade, years that were pretty similar. And then we can discuss that, and we'll have to convert at some point to 2020 dollars, but at least there's nothing deceptive happening under the surface of my calculations. My concern is about cases where we start adding nominal values from different years. There's no way for anyone, including myself, to know what those underlying differences in value between dollars are for different years.
would it be too trite to say that what you're saying is by using nominal values, any conclusion with respect to the impact, any conclusion on impact is meaningless?
Yes, I do believe that.
I may, just so that I understand, I think I've got a series of questions that may be helpful. So this first row of Mr. Hutchings' nominal NCR is his total amount of $1,443,000,000. That, when it is expressed in nominal terms, is it correct to say that that total contains dollars from the year 1898 and dollars from the year 1908
Yes,
and dollars from the year 1918
yes,
and 1928
yes,
and 1938?
yes, and so on.
And so Is your concern with this part of the calculation that the nominal amount includes dollars from different years?
Yes,
And when we think about money at a set period in time, let's say 2020, it doesn't make sense to think of a dollar from 1908 as having the same weight as a dollar from 1978.
I talked about the value of a dollar rather than the weight, but as I understand the way you're using that term, yes, I agree.
So this first row contains all of these dollars from different years combined together into one amount, not brought to the present value.
You're asking me whether he has done that, added together
Yeah,
dollars of
this,
different
this,
years.
this row one amount, it's nominal, and so there's no present value there. He's just treating every dollar from every year as exactly equivalent. Is that right?
Well, he's adding together these dollars of different years that have different value. I can't say how he's treating it or what he infers from that, but that is what he has done here.
And then when we take the other rows 2, 3, 4, 5, and 6, the expenses that were incurred with respect to each of those different expense types, for instance, land agent salaries, or let's not take land agent salaries because that's from the Irving period. Let's say insect control. Those expenses were themselves incurred in different years, right?
Yes,
So were some of those expenses incurred in the year, let's say 1948?
certainly, yes,
And some of those expenses were incurred in the year 1968.
yes.
And the value of a dollar, is it true to, try not to lead the witness, obviously, but get through.
You're trying not to lead the witness, I think you failed. I mean,
That horse is out of the barn.
Yeah.
I'm just trying to get us through, so.
Maybe ask the judge.
Sure, so
If you've got your.
is the value of a dollar in 1948 and 1968 the same?
No,
And so,
I mean, I don't want to lead Mr. Lipton either, but he didn't include any insect control from 1948
Sure.
or 1968 because he didn't include any of the PAO data for those years.
and so is the issue that Mr. Hutchins is including dollars from different years together in these calculations?
That is the issue I'm pointing to here. There is no economic meaning to a sum of nominal dollar amounts of different years when those years are far apart. There's no economic meaning to any of the sums here or any of the percentages which represent ratios of such sums.
So I think after that short and painless discussion,
Painless.
We should move on to what will be the last slide before our break. I know we're, okay, sure. That's fine.
All right, let's do that. We're almost at 1:15. What do you say? 2:30?
30, sure.
All right.
All right.
Could you do me a favor? Make a copy?
This court will recess until 2:30.